This week, on 13th June, we have two webinars waiting for you. By 10 a.m., we have Beyond Market Noise, How to Build a Resilient Portfolio in Current Market Environment. By 11 a.m., we have The Financial Shift Every Woman Must Make Before 40, exclusively for women. Link for both the webinars are attached in the description. To join this webinar, make your weekend a happy learning weekend.
The US Boring Stocks Index had quite a rough month in May. In the month of May, our US Boring Stocks Index comprising the following 10 companies: Crocs, Uber, Amazon, Alphabet, Apple, Pepsi, Kava, Meta, Netflix and Costco lost 1.24%. In comparison, the MSCI was up 4.15% in the month of May, but the real whooper of a performance was Nasdaq, which went up 9.52%. At the time of recording this video, Nasdaq had fallen last night quite sharply and the futures look quite edgy. But our performance during that month was hardly anything to write home about. It has to do with my general aversion to buying stocks which are participating in the semiconductor and AI boom. I have stayed out of this mostly, except some of the FANG companies which have a exposure to this industry. I have not directly bought any semiconductor stocks or any data center stocks. But if you look at the performance of the US Boring Stocks Index from January 2026 till today, but if you compare the performance of the US Boring Stocks Index from 1st January to 31st May, then even that is quite adverse. The US Boring Stocks Index returned 10.55% over these 5 months, while the MSCI returned 10.56. The MSCI World Index is one of our benchmarks, so we are on par with the MSCI World Index, but the Nasdaq over the same period returned 16.8%. Now, when you look at the performance of individual stocks in the month of May, the biggest laggard was Kava, which was down 14.64%. Other laggards in the portfolio: Uber minus 6.26, Alphabet minus 1.77, Pepsi minus 8.42, Netflix minus 6.56, and lastly Costco minus 5.29. The performing stocks in the portfolio: Crocs plus 14.24%, Amazon plus 0.88%, Apple plus 11.51%, and lastly Meta plus 3.9%. So you had nearly 6 stocks not doing well, but you still had 4 stocks in the green. Obviously, the Nasdaq has had some big winners and it hasn't faced the kind of adversity that we have faced. But as we do this video, we don't know whether our stocks are going to fall more than the index, or stocks which have moved the index up in the month of May are going to fall far more in the month of June and give our stocks some respite. Now, should you be too bothered about beating the index? That's the fundamental question. As far as I am concerned, while I am investing in the US market, I want security. I don't want to buy overvalued stocks. I don't want to bat outside the crease, because I think the odds are stacked against us in that market. I think there is a situation where I am unable to justify the valuations of many companies which are market moving or market leading. I can't understand why they're so excessively valued. I'm not seeing the return metrics for the kind of cash flows that they are investing now into their business. I don't see profits coming soon enough for these companies. And I feel that it's a matter of time before the market also sees what I'm seeing, because that's the reality. I don't think these companies are going to surprised the market so much on the upside. Also, the supply of very high quality paper or very attractive paper, both is very high. So, high quality paper generally attracts a higher valuation, you know that, and paper which people are very attracted towards, something they feel they must own, also attract higher valuations. So, we are seeing a combination of both, and generally I sit out of both. I do not participate in both. So, whatever happens in the month of June, I would largely remain a spectator. In any case, the boring index does not warrant interventions or actions or very active decision making. I believe that we have constructed a reasonably conservative portfolio, which should be somewhat insulated from the impact of the AI bubble getting pricked or the confidence of investors getting shaken in these companies purely because of the valuation reason. So, we are outside of it. So, whether we will have the same impact, I doubt that, but whether we will have no impact, I doubt that as well. So, when the markets fall, we will also be affected, our stocks will also fall, and some of the FANG companies indirectly are definitely very deeply connected to the AI trade and the semiconductor trade. And I think that we'll have to wait and see what the impact would be in our portfolio due to the sharp correction that seems to have just begun in the US markets. Overall, June promises to be a very interesting month for the boring stocks index. Its composition, as you know, is having a mix of two worlds, one that takes a proxy on consumption and another which takes a proxy on the new age FANG businesses. But there is another set of companies outside of all these companies which is really uh, a basket of futuristic companies. Some of them are going public now, some of them are already getting traded at high valuations. We do not own proxies to that trade except the FANG companies. It remains to be seen whether that is a good decision or a bad decision. But be what it may, I feel very comfortable with this kind of a portfolio. I want to know what you feel about your US stock portfolio, how you are perceiving uh, the current volatility, whether you would buy boring companies like I have done, or you want to buy that exciting pack which may correct and give you another opportunity to invest. What are your thoughts? Do share your thoughts. Follow my channel and let's keep this conversation going month after month. Thank you very much.